Something massive is about to unfold for Opendoor, and this could be one of the most important weeks for the stock all year. The setup right now is insane. You've got the Fed, Trump, China, earnings, and a market that's sitting right on the edge of a major breakout. And when you put all that together, it creates a moment that could completely flip the direction of Opendoor, either to the next level higher or straight back down. This is the kind of week that defines whether you make big money or miss the move entirely. So before we get into all the details, make sure to hit that like button, subscribe if you haven't already, and now let's get right into what's happening with Opendoor. This upcoming week is shaping up to be wild. The first big thing that everyone's watching is the Federal Reserve's interest rate decision. The market is almost certain we're going to see a 25 basis point cut, and that's huge for growth stocks, especially for a company like Opendoor. Lower rates make housing more attractive, borrowing cheaper, and risk appetite stronger. But the real magic happens after the announcement, when Jerome Powell speaks. Because if Powell even hints at another rate cut coming during the December 10th meeting, the market is going to lose its mind. We already know from the FOMC minutes that several members have been open to the idea of multiple cuts before the end of 2025. So if Powell confirms that, expect a massive move, not just across tech, but also in risk names like Opendoor. That kind of comment could light the fire under momentum stocks again and push valuations higher in just a few sessions. And it's not just the Fed. Later in the week, Trump is scheduled to meet with Chinese officials, and that could be another major catalyst. One of the biggest concerns in the market right now has been the potential tariffs starting November 1st. If that meeting goes well, or if those tariffs get delayed, it's game on. The market would absolutely FOMO into risk assets, and growth names like Opendoor would benefit from that rush of optimism. Then we have earnings season heating up again, and that's where things could really start to pick up speed. Big tech names and real estate adjacent companies are all reporting this week, and positive guidance from them could easily lift sentiment across the board. Combine all of this, lower rates, possible tariff relief, and upbeat earnings, and you get one explosive setup for a risk rally. Now, zooming in on Opendoor itself, the stock already had strong momentum from last week, and it's carrying that energy right into this one. Over the weekend, a lot of traders have been calling it, "See you at $25." That's the kind of bullish sentiment we haven't seen in a while, and it's spreading fast. But there's more happening behind the scenes that's just as important. Kaz, who was previously at Shopify, made a statement that really caught attention. He said that during his time at Shopify, he learned how much better machines can perform at pricing and underwriting when models are built right. And now at Opendoor, he's taking that same concept and applying it to real estate. He said their models at Opendoor are going to be world-class, far better than humans at pricing, and that they should let the machines do the work. That tells you where the company's heading. Full AI integration into real estate pricing and transactions. And here's the thing. Wall Street hasn't fully priced that in yet. If the market starts viewing Opendoor as an AI-powered real estate company rather than just a home-flipping business, the valuation multiple could change drastically. That's the kind of shift that can quietly send a stock from single digits into the double-digit territory fast. There was, however, one small negative headline that came out over the weekend. Canada might be facing a 10% tariff increase. It's not a huge deal for Opendoor directly, but it does show how quickly global politics can ripple through markets. Still, the overall tone for this week feels risk-on. There are too many bullish catalysts stacked together for traders to ignore. Now let's talk data, because this is where things get really interesting. Right now, about 22.2% of Opendoor's free float is shorted. That's roughly 157.6 million shares, a massive number. When you've got that much short interest, any kind of positive momentum can trigger what traders like to call the mother of all short squeezes. That's why you're seeing so many bullish traders talking about this setup. They see the potential for something big. Technically, Opendoor closed the week at $7.97. It's sitting right between its R1 resistance and its pivot level. The key support to watch is around 7.65 cents. That's the line bulls want to defend. If it holds and momentum builds, the next resistance levels are at 10.23 and then 11.83. Those are the short-term targets traders are watching closely. Momentum is strong, sentiment is bullish, and risk appetite is coming back into the market. If Powell gives even a small hint of optimism, anything suggesting another rate cut, you could see an explosive reaction not just in Opendoor, but across every speculative stock out there. That's the trigger everyone's waiting for. Friday's close above the 10-day moving average adds more confidence to the setup. We're going into this week with solid momentum, improving volume, and a lot of traders positioned for upside. There haven't been any fresh analyst ratings recently, but we could see new coverage after Opendoor's next earnings in early November. That's when we'll really find out whether Wall Street starts assigning that AI-type multiple to the company. For now, it's all about the momentum. Traders are targeting the $10 zone by the end of the week, while bears expect a pullback towards $7.50 to $8. But if sentiment holds and Powell delivers what the market wants to hear, bulls could easily win this round. So what do you think? Is Opendoor about to break out again, or is this just another temporary bounce before the next dip? Did you buy the dip when it dropped into the $6 range, or are you still waiting on the sidelines? Drop your thoughts below. I'd love to hear how you're playing this setup. And as always, this video is for educational and entertainment purposes only. It is not financial advice. Always do your own research before making any investment decisions.